which is the high point since the 2016 rally. And Dave, are we headed higher? Are we going to break that 20 mark? Or will we see what I know is on a lot of people's minds, the hammer drop, the price fall off a cliff?
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and I am excited, as always, to be joined by Dave Kranzler. Wow, what you got there, homie? Well, it looks a little upside down.
Oh.
Flip it. Yeah, there we go. You got a book, The Big Silver Short. What is that about, Dave?
I don't know. It seems like it's full of conspiracy theories.
Yeah. So there's, well, I guess we can kick right into it. Although first I will mention that today's episode is sponsored by Miles Franklin, precious metals dealer, and a place where you can get any sort of gold, silver, platinum, or palladium. Where'd my figurine go? I'm working on tracking down some of those figurines for you as well, Dave. But anybody that is interested in buying or selling metals, you can get pricing, questions answered at Arcadia at milesfranklin.com. And especially this week, Dave, you know there's a special on junk silver, $249 over spot, big boy. What do you think about that?
What's that for pre-64 dimes and quarters?
And plus,
Nice.
Yara, who you know and is the Arcadia maven behind the scenes here, will be handling those orders. So, and it's kind of nice that met Yara about 2 years ago, and she's quite a silver expert these days. So anyone has questions about silver, you can contact Yara at Arcadia at milesfranklin.com. And Dave, as we dig in today, we've seen quite a rally. I will pull up our silver chart here. I mean, it's amazing. You can even, a chart that will make Silver Bill Murphy smile 2 to 3 out of 5 days of a week. I mean, you see rallies consistently. We hit a 4-year high.
No, Midas is going to be grumpy until silver gets back to 50.
Well, I called him, and during our Denver meetup on Monday, where we have coffee and wait for Kranzler to show up one of these weeks, actually, we have
I
witnesses.
don't want to get the virus, man.
Well, I know you don't like leaving your home much, but still a 4-year high you get right there on Wednesday, which is the high point since the 2016 rally. And Dave, are we headed higher? Are we going to break that 20 mark? Or will we see what I know is on a lot of people's minds, the hammer drop, the price fall off a cliff? Who knows? We're recording Friday at, it's about noon Eastern, so 1930 price. Could we see a plummet down to $19, pin there for the weekend? But Dave, what do you say, my friend?
So wait, did you ask me a question?
Yeah, well, as a general theme and thought pattern, is the silver smash coming, Dave Kranzler?
It depends on how you define smash, right?
Okay, how would you like to, are we going to see the price drop off a cliff like has become so commonplace?
Well, I mean, if you say, is a smash like 50 cents one day or $1 one day? What I would define as a smash is what we saw in March when it went from almost 19 to almost 11, right?
Okay, well then, sure.
I don't think we're going to see one of those.
Do you think we will see silver go down $1 in a day on no news where it seems to fit that definition of a spoof? Do you think we are done seeing $1 plummets?
I would never want to be like as dogmatic as saying never. I mean, anything can happen when you're dealing with banks as corrupt as our banking system is now. I'm serious. I mean, anything can happen, and you're dealing with a corrupted market, which is the derivatives market for gold and silver. So you can't say never. I mean, one of these days, JP Morgan could show up to work and, on orders from the BIS, like, dump 200,000 silver contracts on the COMEX all at once. And, you'd probably see a $4 or $5 price hit. We saw hits like that in, well, not $4 or $5 in a day, but $4 or $5 very, very quickly. Actually, I take that back. There was a day, I want to say it was in maybe July of 2008, and silver was pushing up towards 20, and it was a Sunday afternoon, and that's when the access market, well, it was called access back then, the Globex market, the CME, global computerized market. I just remember I was in the backyard playing with the dog, and it was around 5 o'clock, and I went in to just check on the futures market because I used to trade futures quite a bit back then. And it was like silver was down like $2 or $3. And I was like, it's like, what? Is that a mistake? And I checked some other sources and like, no, that seems to be the price. And it was like, I go into my email box and it's like, is this for real? I was getting these emails were lined up. Is this for real? So, I mean, and that was the start of the final price takedown ahead of them implementing QE, ahead of the Lehman collapse. It was after Bear collapsed, and they knew then. I'm sure they knew at the beginning of the year, if not even sooner, they were going to have to start printing money at some point to keep the banks from collapsing. And so, when they do that, you can't let gold and silver let everyone know it's a bad idea to print money like that, right? So you take the price down. That's what we saw in March, right? I mean, that smash was before the Sunday when, the big smash, 2-week smash is basically what it was. That was before that Sunday evening when Pee Wee Herman Powell, announced that he was going to print as much as it takes to revive the economy. When, the fact of the matter is he's printing money, and it started in September to keep the banks from collapsing. And that's what that was all about. But that's what that smash was all about. And it helped him that the stock market had started to tank about 2 weeks before they started in on the precious metals sector. So I don't want to say never, but I feel pretty confident that, again, I don't want to say we're probably going to stay above 17 from here on out until the monetary reset happens. But I feel much better about the price movement we've seen since this leg of the bull market started than I did when it went straight up at the beginning of 2016. I mean, silver went from basically, I don't know, call it 14 up to 21 in 6 months, right? That was too quick. I mean, it looks like a chart of Tesla's stock, and you knew that was a low quality move. But now, I would argue that the current bull rise that we've seen actually started in August of 2018. I mean, if you pull up a long-term
This
daily
one's
chart,
been going on for a while. I mean, because you really had the move last summer that began in end of May, and then silver hit $19 in September, and then sure enough came back in. So you're right. This has been
and if you look at where it started getting hit in August. Gold and silver started getting hit in August, and I read a pretty good article from Wall Street on Parade where they make the case, and I forget what all the data is that they pointed to, because the money printing started in mid-September. They make the case that the banks really started running into trouble in August. So I'm guessing they were already formulating their money printing plan in the last summer. So and that's when we saw a downdraft, and then it kind of went sideways, and then we had them, until March, and then we had that big smash. But what my point here is that we've had a much more gradual rise in this leg of the bull market if you measure it from, say, August 2018 to now. It's a much higher quality move, and you've had periods where fast money piles in and gets washed out. and then, and then we go higher again. So, I mean, I'm actually impressed by the strength of the precious metals today, because usually on a slow summer Friday is when they get hammered. And I've happened to notice that, especially on days when you wake up and the S&P futures are up double digits for no reason, no good reason. I have a feeling that the Fed was in there, the New York Fed was in there, propping things up, printing money. And I think that's what the precious metals are smelling on a day like today. Because technically the precious metals still are kind of somewhat set up for a takedown, but we may have seen that, Tuesday, Wednesday, Thursday this week. Again, I don't know for sure, but we'll see.
It seems, for whatever it's worth, just that, like you said, it's harder for the price to go down. It's not going down as far as severe. Although, by the way, Dave, in your new book you have there in chapter 16, actually connects what Bart Chilton said with a lot of the other information that was introduced in the book, and shows how what happened in 2008, I would say, where a lot of people say that gold went from 1,000 to 700, silver went from 21 to 9, and they often say that was panic selling. I would flat out dispute that, because
Nope.
Bart Chilton even described how JP Morgan was increasing their position. You had dealers that were run that they couldn't. Miles Franklin thought they were going to go out of business because they didn't have, there was no silver available anywhere. And this is while the Fed's doing historic interest rate cuts. And Dave, I would love, in fact, I've been thinking about asking you this one for 2 years. So today, I'm glad I have the chart pulled up. Any thoughts? Do you remember that Sunday night? This is back in April 29th, May 1st of 2011. Silver, you see, had reached above $49. And then that Sunday night, it just opens and wham, down a 6-piece there. Do you remember that day, and any thoughts that you might care to share? I've always wondered about that.
I try to forget that day. I mean, that right there, that was after, like, silver went parabolic. Again, I don't remember how quickly it ran up, very quickly, from like $30 to $50.
Yep.
And no one really knows what the catalyst was. I mean, from a fundamental standpoint and an intrinsic value standpoint, silver was still cheap at $50. But if I do recall, and again, I'd have to go back and revisit the numbers, and it's not worth the time it takes to do it. But I think the net short interest in silver contracts on the COMEX by the banks was just enormous. And they were looking at hundreds of millions of dollars in losses if silver stayed at 50, right? So without a question, I'm not going to say that move that you're seeing is 100% manipulation, but certainly someone dumped a massive amount of paper onto the COMEX, and I believe it started, I can't remember for sure, but I believe it started like maybe late in the evening, or early in the morning. Because there was another time when something similar happened. It was after gold and silver had a big run up in 2006, from like, I don't know, November, December 2005 to mid-May 2006. And the reason I remember this is vividly is because I had a pretty big personal position in silver futures, and we were down in Taos for my parents' 50th wedding anniversary. And after everyone went to bed, I went to this coffee shop that stayed open till like 1 a.m. and had Wi-Fi. Can you believe that? In 2006, there was Wi-Fi. But anyway, and I remember I'm just sitting there watching it, and silver was like rising. I think it had gotten up to almost $14. This is like, we're talking about, it rose from 5 to 14. And I'm sitting there thinking, I wonder if I should take some profits. And because I had my bets pressed, and all of a sudden, bam, it was probably like, I don't know, 11:30 at night, New Mexico time, you know, and that's, again, it's not a, it's a very quiet period, especially back then for gold and futures trading. Now it's, you know, globally, the trading in paper wasn't in paper, gold and silver was not nearly as widespread or as deep as it is now.
Yep.
So it was easier for them to push the market around. And so that was kind of a mini version of what happened in 2011. So yeah, when you see that happen, it's horrifying, because you know that, yeah, there's hot money that's their, you know, their stop losses are being triggered, but they were intentionally triggered. So and that was basically a shock and awe attack on the market, and it worked. I don't know if something like that would work this time, because there seems to be a much wider audience that's interested in actually taking delivery and possession of gold and silver. Now, I'm not saying that the guys that are taking delivery on the COMEX are taking possession of it, but certainly there's retail and high net worth retail people that are taking delivery of a lot more different forms of gold and silver. And also China and India started massive solar programs, nationalized solar programs, and they're consuming a lot of silver for that.
Yep.
And that helps also. It helps, like, the banks can't go crazy to the short side. They can't go medieval to the short side like they did in May 2006 or April 2011, because they if they get too far over their skis, they may have a problem sourcing gold and silver to deliver.
Yep. I'm hearing a lot of people mention upper 20 targets, a lot of the technical analysts. Any thoughts on that?
I stopped paying attention to technical analysis in this sector in 2004. My fund partner, who's, you know, sadly now deceased, he you know, that was his bread and butter, was technical analysis. He had a commodities firm in Denver in the 70s, and he used to try and execute some trades using technical analysis, and it would always do the opposite of what his technical analysis told him should happen. You know, if it was a stock, the trade would have worked, but because the market is so manipulated with paper, you know, it really kind of except for maybe in very short periods of time, it makes technical analysis irrelevant. I mean, I remember, and you don't see it now as much because I think it's harder for them to do it. But they used to paint the tape to make the tape look bullish, you know, make the charts look bullish, and that would always, you know, precede a massive price takedown. So, you know, the other thing that I'm thinking about it that we're not seeing, or at least not hearing about, which tells me it's not happening, back, especially for the first 10 years of this century, and including 2011, so a little longer than the first 10 years of the century, what would happen was when these guys needed to take the price down, or were looking to take the price down, the first thing they would do is they would dump a big chunk of physical gold on the LBMA, like more gold than they knew there would be buyers for in the AM and PM fix, so that it would take the price down, you know, and you'd see these go straight down and it'd be followed by the futures. And I don't know if it happened before this, but I think Gordon Brown certainly set the precedence for it when he dumped 400 tons of England's gold, the Bank of England's gold, you know, onto the LBMA, and that's what pushed the price of gold ultimately down to 250. It's called Gordon's bottom. I don't know if it's still called that, but and so from time to time, and that, like that night in May that I referenced, that, you know, there was a big physical drop, you know, around that time, and that's what they used to do. They used to dump a big slug of physical gold. I don't think they have the gold to do that with anymore.
Well, I hear you on that, and certainly it makes you wonder at what point some of these drops stop, and if we see an acceleration. Last real quick one for you before we wrap up today, sir. So we'll pull up.
Well, wait a minute. I guess just to kind of wrap up whether or not I'm expecting a price smash. I mean, again, any given day, anything can happen in the paper market for gold and silver.
Yeah.
But I would personally use always keep cash on hand. Don't ever be fully invested, especially in this sector, because, you know, no matter what happens, until there's a monetary reset, there's going to be a manipulated price takedown. And, you know, we're in the type of market right now that I think this market will last for at least, you know, another year or two at least. You want to buy the manipulated price takedowns. It's like, you know, it's free money at this point when that happens.
All righty. Well, duly noted, sir. And last question for you here.
Wait till the Robinhood guys discover SLV. I mean,
Well, we'll see how that goes. Although we've seen silver got to about $50, 1980, $49, let's call it 2011. Next time it hits $50 or that area, Dave, does it go over and stay over?
I don't know. I want to see it go over 20 and stay over that first.
Well, hopefully next week. And the good news is that
It'll happen quickly, though. You know, silver, when it starts to move, it really moves. I mean, you know, look at it today; it's up 1%.
Yeah, I know it's wild to see silver up again.
Isn't that amazing? Like the S&P can be up 0.5%, and like the guys on, you know, financial media TV look like they're having orgasms. Gold or silver could be up 1%, and they don't even talk about it.
Well,
if they only knew the profit opportunity they're missing. I mean, you know, the equity side of my fund was up over 100% in the second quarter. Did we hear about mining stocks on CNBC or Bloomberg TV or Fox Business? No.
Well, Dave, would
Did
you
the Wall
be
Street
kind
Journal
enough?
talk about it, or Barron's? No.
Well, this is your opportunity. Perhaps would you like to read your own quote on the back of the big silver short?
If I could find it, you know,
Right there on the bottom, because you were actually on the back of the book, and I thought it was a great quote. And I'm curious if now that you have the book, if you would agree that
seems like I should have this memorized, doesn't it? This book is what the Wall Street banks have tried to keep hidden from you. The investors who read it while there's still time to act will benefit for generations to come.
And who said that?
Some idiot, probably.
Yeah, they call him Denver Dave. Although the good news is that for anyone who wants to know what's going to happen, whether the price is going to go up or down, left or right, that Dave, you got the mining stock journal there. Everybody's covered. It's like having your roadmap through the upcoming insanity. And anything to look forward to this coming week?
Yeah, more sunshine and tennis.
Yeah, well, that too. I know I said we were going to dig in.
Oh, well, my next issue of the Mining Stock Journal comes out next Thursday.
And hopefully we'll have lots of coverage of these silver stocks. We didn't get into that today, but that is a great reason why you can hit that subscribe button and the notification bell so that next week, Dave, remind me, we'll dig into some of these silver stocks. We've had a bunch of them on the show. I know people are interested in what's the best way to go. And folks, for anyone who was curious to hear a little bit more about what Dave mentioned and what happened in 2008 in the silver price, well, fortunately, that is coming your way now.